Again, a really, really common question, and I think it's a misconception, I would say. People think all lenders multiply the same way, so you have £30,000 income and then they just do a 4.5 or 4.7 multiple and that's it. It isn't that simple, and it's good news that not all lenders will use just a 4.5, 4.7 multiple. Some actually can do even 5 or 5.5 times, which is really, really good. The multiplication and your affordability or the size of the mortgage they can lend you will depend on a lot of things. It will very much depend on your credit score. Some lenders will lend you significantly more if your credit score is really good and really high. It will depend on the size of the deposit. The more deposit you provide, the lender has more scope probably to lend you a bit more. It will very much depend on not just the income, but also your credit commitment. So you might earn, I don't know, 80,000 a year and you think, oh, I can borrow so much, but you have a lot of credit commitments in the background, large higher purchase payments, for example, private school fees, large credit card balances, maybe other mortgages in the background. All these credit commitments, student loan even, will count towards credit commitments. All these credit commitments will reduce the mortgage amount. So it isn't so simple to tell you how much you can borrow. Again, my advice is speak to a broker. A broker will do the calculations, but also a broker has an insight of which lender will lend you more, because there is a massive difference between lender and lender. They also follow different schemes, so some might have a booster scheme for first-time buyers depending on, for example, how much they are earning. Also, some lenders might give you more if you are fixing that product for 5 years and not 2 years, so there's so much to it. Again, my advice is speak to a broker and they will be able to guide you and make sure that you can borrow the amount you need to borrow.